think with COVID-19 and the economic, downturn and recovery that's ahead of us, an incredibly large amount of good news has been priced in. So even if the recovery is robust, which is certainly not our central scenario, I still think markets will struggle to hang on to these gains. So I think there's very little doubt there's more downside risk to the markets than upside risk, considering the growth backdrop that Jerome Powell talked about in his testimony the other day.
Well, how do you position now in markets with all of that in mind then?
Yeah, well, the challenge for markets now is that, in the wake of the Fed stimulus, not only have risk markets rallied to the, extent that equities and credit markets had recovered, around 80% of their decline. So, they weren't far from all-time highs again. But the challenge also is a lot of the traditional safe havens have rallied. So the yen is lower at around 107. Gold's probably about 3% from an all-time high. Bond yields are well below 1%. So it's actually a very, very challenging environment. So you need to kind of pick through the weeds and try to find, what actually is still attractively priced. And there's not a whole bunch of of options out there at the moment. So we like things like the US dollar and the yen. We think they're going to be good risk-off trades. Aussie yen's particularly a good trade. That's worked really well so far this cycle. But in the end, defence is very expensive. So when you're trying to diversify equity risk, it's more challenging than it's ever been, thanks to the Fed stimulus.